Yeah, I think like the framework that I've always recommended has been like pinpointing, first of all, like companies that you see as your competitors. I like to work backwards. So I say, especially in an environment like this, getting as specific as possible with like the funds and the individuals you speak to are the best things you can do. Go and figure out every one of your competitors who is on their cap table, like whether it's just like looking at their portfolios, list all of those people out. And then just figure out if there's any other companies within the realm that they've invested in that are similar to yours. List out all of those investors from angel investors, pre-seed to maybe like seed and then pre-series A. List all of those people out on a Google spreadsheet. I think every founder should have an email list of like 50 investors or VCs that they really trust, that they know is like not going to share their information. Send that Google spreadsheet to 50 VCs and investors and ask them to put down like who they know in that list and then get warm introductions.
Hey everybody, welcome again to yet another episode of the Undefeated Underdogs Podcast. I'm your host, Sharath. Today I have an interesting guest who's into VC, Zehra Naqvi. Welcome to the show, Zehra. How are you feeling today?
I'm good. I'm super excited to be here. I'm excited to see what your questions are and just share a little bit more about what I've been up to. And then, of course, would love to hear also your answers and responses to all the questions that you asked me.
Absolutely, yeah. As so many of you know, I keep the conversation more authentic and there is no prep work. But I do have some questions I've prepared for you. But before diving into the questions, I want to just give a brief intro of Zehra. Zehra is a senior investment associate at Republic. You know, Republic, I'm a big fan of Republic. I love what you guys doing. She grew quickly from being an intern to where she is right now in like less than 2 years. She's also a founder and a community builder. She founded this company called Glow with her sister, if I'm not wrong, and which I want to dive into deeper. But yeah, Zehra, thanks for taking time. Appreciate you. I wanna keep the conversation more authentic. And again, the guests I have are more diverse. They're not, doesn't belong to like one identity or so. I've had like creators, founders, and lot many people in. Super interesting. Looking at your background, you've done. Oh my God, you've done so many things. I've went through your LinkedIn feed, and man, I have to tell you, like, I don't know how did you manage getting so many internships and like working at so many different startups. So let's dive into the story, into your story. So right off the bat, I have like this question. Tell me more about yourself. How did you ended up in VC? What was like the trigger that came for you where you were like working at Republic?
Yeah, for sure. I think kind of as you referenced, I got into the space primarily from like the founder perspective. And I think it's interesting because now that I am kind of tangentially involved in the VC space, there's almost this notion that certain businesses that are VC backable are of more value than businesses that aren't. And the first company that I founded was certainly not VC backable. It was an e-commerce company and it was super successful. My younger sister and I ran it. And I think that was like the impetus towards like being a founder, creating things, just like wanting to build. And although that experience was really formative from my founder perspective, I think the internships I did throughout college went anywhere from like a pre-seed fintech company all the way to like Series B consumer companies. And the constant conversation I was always hearing like the founder, the CEO talk about was fundraising. And I knew what VC was. Obviously, I'd heard about it, but seeing like a pre-seed fintech founder and then like a CPG Series B founder have the same problems when it came to fundraising was just like something that kept coming up over and over and over again. And naturally, from like the founder perspective and working with incredible founders, I wanted to understand who were these people on the other side? Like, what were they thinking of? How did they decide what they want to invest in? And what does that entire breakdown really look like? And so that was kind of like why I got interested in VC. And then I think naturally just had a lot of criticisms of the space. I think we can maybe kind of dive deeper into that. But Republic was one of the internships I had when I was at school. And it was such a unique combination of doing what like a VC analyst or a VC associate does, like talking to founders, looking at their financial statements, their cap tables, presenting to the investment committee. But at the same time, Republic was a startup when I joined. We had like 50 employees and now we have like 585. So, and this is like in less than 2 years. So I got to also be part of another startup, be like an operator and understand how the company planned on growing. So long story short, that was just kind of my foray into VC, just really seeing like the same problems that all types of founders were dealing with, wanting to dive into it deeper, and then being presented this incredible opportunity. I mean, I did like chase a lot of Republic employees, pitching them about me being an intern, which led to my full-time job, but that's really kind of the journey that got me here.
So you hustled.
Yeah, I did.
Well, yeah, I was just joking, but no, that's a very fascinating way of looking at things. Which is the number one question I have following up to your answer was I've kept hearing a lot of these founders turning into VCs, or getting into venture capitalists, in that business. I kind of have an opinion on that because I want to become like that, like build a venture-backed business. Hopefully, like, make an impact eventually, like, turn into an investor. I see like there are some potential, not doing this for money, but it's about like paying it forward, at least for me. That's my kind of, the way I look at things. Founders should become VCs eventually because they actually have skin in the game and whatnot. So I want to hear your take. You're a founder yourself, and you mentioned about VCs backing non-venture scaled ideas as well in your answer. So two things, like, why do you think founders should become VCs? Number one. Number two is what's your take on VCs backing non-venture ideas?
Yeah, I think the first, just kind of the notion of like founders becoming VCs and what that path looks like. Every VC that I have spoken to that has been a founder, has been an operator, really, really early on in a startup, are almost always the VCs who I think resonate with the founder journey at a much deeper level. And these are typically the investors who I think look at the more like pre-seed and seed level. And I really do think that at that phase, having experience in an early stage startup or being a founder is so informative, because if you compare like my experiences to some of my friends who maybe work in consulting or banking, they're not going to like have the same perspective of what it means to actually like scale and build a startup and what qualities to look for, because it's just like it's not really transferable. And I think sometimes people forget that like VC is an extension of traditional finance, and so there's not always just like the intuitive understanding of what it means to like build a company. And I think founders obviously have that perspective. And my whole like kind of perspective on the VC industry is that it needs to change to be more founder friendly, which I don't think it is at this point. I think we're at a turning point because of Twitter, because of accessibility, because of just events and community, like a huge fluff word, but like genuinely because of all of this, like founders are becoming more informed about their options, and they're becoming more informed on how to understand like what a VC is looking for, but also how to protect themselves from deals that might be a little predatory or not giving away too many advisory shares. And so I think founders who become VCs understand the other side versus VCs who don't have that experience. And obviously, I don't think it's a hard and fast rule. I think there are VCs who are incredible and they were never founders, never worked at a startup. But I do just think that intuitive understanding almost just makes a VC more capable of a deeper understanding of just like who they're investing in. I think the second idea about like venture backable businesses and what that means, I think in the past like decade, we've seen a lot of companies that are getting backed by VCs that maybe like 20 years ago wouldn't have. And I really like that change in the space, because I think the VC like tech growth model is not the same model that you can apply to a consumer company. And there are VCs who will say like CPG is a waste, like CPG investing in for VCs, like the model doesn't make sense. And I would push back against that. I would say that VC has been developed for these like astronomically huge, like growing tech companies, which is like one subsect of it. But there are VCs who have incredibly thoughtful processes when it comes to investing in consumer companies, in CPG companies, who are changing the models that are used to assess different types of industries. And so I just hate the like whole notion where people will say like that's not a venture backable idea, as if though it's still not good. And
Right.
it's not like a good idea. So I feel like those the pedestal and the hierarchy of like VC funding being the best and like taking out debt being like the worst. I think that hierarchy needs to be broken down. All types of fundraising for all businesses should be considered equal. Kind of goes into the conversation about Republic and what we do here, but I think it needs to become more
Right.
linear and like flat as opposed to a hierarchy.
Yeah, I love your take on both answers, and I feel Republic is actually enabling that, right? Like as I've invested in Gumroad through Republic when I think back in 2020, I guess I don't remember, but and there are like two things Republic does it really well. One is like how you mentioned, basically anybody can raise money, and Republic uses community as a leverage, as a tool to open up that investment. You don't have to necessarily go. Community investment is always the right investment in my opinion, because of course VC investment is a separate discussion, but that bridge is something Republic is actually building it. Number one. Number two is what was the other thing I forgot to mention? We were mentioning about so I think it's not just tech or people who are building companies in Silicon Valley, right? There are like not just only consumer products or sexy products. Like there are so many other startups that are popping up which are much more values. I think Ryan, who were invested in I forgot the name, but they empower small businesses like their mom and pop shops, and the same way Republic is actually like empowering to invest in anything, right? So I really like that angle. I feel that's what Republic is doing on a different level. So let's actually kind of go back to your origin story, which I want to like dive into a little deeper. So I saw you're from Hong Kong, if I'm not wrong. Like you were born and raised there, and then you moved to the US. So how did the whole transition happen, and how did you end up in New York City?
So I did grow up in Hong Kong and Singapore, and then really like the transition to New York City was when I was like younger and I had been running my company. I think like every kid at some point just kind of like I don't know, but idolizes New York at some point. And I think for me, this is kind of a funny story, but for me, when I saw, I think like Spider-Man 2 when I was like 9 years old, I was like, wow, New York. And it was just like something that kind of stuck in my mind. But like really, as I got older and I started looking at colleges, I really resonated with Columbia, which is, of course, uptown here in New York City. So when I finished school in Hong Kong, I moved to New York. And part of the motivation was really because I think New York is becoming just like a huge, I mean, now it definitely is, but even just like 10 years ago, New York like was starting to just become like a huge tech startup ecosystem and a startup scene. And I remember talking about, I think people used to say that like Chelsea and Flatiron is where like all the startups are, which is so true because I'm literally in the Republic office and we're in Flatiron. But I think that was like a huge motivation to come to New York. It was kind of at the edge of all of these things. And I ended up taking a course with Jenny Fielding at Columbia, who was an MD at Techstars. And she was like, she's a really huge reason why like tech companies move to New York. And so even being able to like take a class with her, and that was like the first time I ever learned about venture capital, and having her teach it was like so incredible. And it was like one of the reasons I wanted to come to New York and go to school there and go to Columbia.
Nice. I love that. There is always some sort of a passion story for folks who move to the US. I've had the same similar reason why I want to move to US from India. We want to just like be the best folks in the whole world and do some things that are more impactful. So love that story. By the way, so the startup I'm mentioning about earlier before, where it helps people to invest in small businesses. It's called Bonsai. You guys definitely check it out. It is really empowering people to invest in like mom and pop shops, local businesses. So going back to your story, I love that you're a founder who is getting into VC and you're kind of like growing level by level. So tell me about the story behind Glow. How did you and your younger sister came up with the idea? Tell me about the whole story.
Yeah, I think when we came up with the idea, it was almost at like the the beginning of like the influencer era, which I reference because when we were like in Hong Kong, growing up, YouTube now like democratized all the trends that were happening in America and then were coming to like East Asia, like our school in Hong Kong. And we all just kind of realized there was this huge, overwhelming demand for products and designs and trends that just did not exist in Hong Kong. Like we didn't have Topshop, we didn't have Forever 21, we didn't have H&M. So people were consuming all of this content that was now more easily democratized because of YouTube. But there was almost this
Right.
just like hunger to like get involved in that. And I had always been creative, and I mean, obviously with Pakistani clothing and South Asian clothing, there's so much design that goes into it. So I was very interested in fashion from a
Mm-hmm.
really early age. And because I
Mm.
realized and just kind of noticed these like a rising demand in the Southeast Asia region for those types of clothes. My sister and I basically
Mm.
were like, we've had this interest in doing just fashion for a long time, and we wanted to go ahead and start with just like producing very, very simple like demand and supply, and just
Right.
like really providing the clothing that we were seeing other like 12 and 14-year-olds really wanting. And it's interesting because we started the company, and this was like I think 2013, and we scaled to like 20,000 followers on Instagram in like 3 months. And this was primarily in the
Wow.
Southeast Asian region. So it was like clear that there was demand for this, and people
Mm.
wanted it. And my sister and I then just like continued to investigate influencer stuff. So I like to say that we were like one of the first consumer companies that were doing this whole like influencer, like mailing them products, and they would post us and tag us, and we would like track how many customers they brought. And this was like literally over 10 years ago that we were doing this. So it was really
Right.
interesting because it was born out of a very simple just need and a desire that we were seeing, obviously, like amongst myself and my sister and all of our friends. And then it became like running this business where I learned so much more than I thought I would have.
That's awesome. I love that story on many levels. I really like that you're kind of like you started off finding your own passion and eventually found the VC world. So I love that. So let's switch gears a little bit and we talk about the elephant in the room, which is now most people are saying we're almost getting into recession, right? Like, and the market is, of course, it's still down.
Mhm.
Not many deals are popping up. Very few startups are actually raising money. Uh, how's the situation in Republic? Like what's like the demand? Earlier it's different. Like I'm assuming like you get more deals,
Mhm.
uh, like in 2020, 2021, but now that there is like a dip, right? How are you handling internally? If you want to share, what's the situation like?
Yeah, I think it's a really interesting question because you're exactly right. Like 2020 and 2021, in the whole VC ecosystem was just this huge boom. Like you mentioned that you invested in Gumroad. I think Gumroad like raised that 5 million in a handful of hours, if I'm not mistaken. And what's interesting is Republic, even though we've been here for 6 years and we spun out of AngelList, like that's where our founder was when he started Republic, and we've been building towards
Right.
this reputability. I think the old school VC mentality that like again VC fundraising is the best and everything else just comes second. That's something that we've had to grapple with, and I think it's interesting because as you referenced, the like macroeconomic conditions are kind of worsening. VCs are not writing as many checks. It's really hard to figure out like who is an active angel investor. And I've had conversations
Right.
with lots of founders who get frustrated because they have a conversation with a VC and it's clear they're not writing checks, so it almost just becomes like wasted time. It's interesting because I used to talk to at least like 40 to 50 founders a week since I've started this, and being at Republic and talking to founders. And so many founders are
Right.
coming back because they have loyal communities, they have family and friends, they have angel investors from earlier in their round, and now they want to
Right.
do kind of platforms like Republic because I think there's almost this like demonization of every other type of fundraising that's not VC. And I feel like there's this
Right.
connotation that founders are afraid of where if they don't do VC, then it's like everything else is second best. So it's interesting because
Mm.
of what's happening in the macroeconomic conditions and the way that VCs are just kind of grappling with it. So many more founders are kind of turning to these alternative fundraising methods, Republic included, debt included. I do a lot of talks about like all types of fundraising, so not just Reg CF, but just taking out debt, taking out
Right.
a loan, angel investing. What does all of that look
Right.
like? So it's interesting because we are just having this influx coming back, I think, because of the macroeconomic conditions. And it's great because I'm
Mm.
I'm hoping that this moment will allow people to like no longer demonize certain types of fundraising and just like take VC fundraising off the pedestal. Again, I think everything needs to be considered equal. And so I'm glad to see more founders coming to just Republic's door and kind of wanting to learn more about what it looks like, given, I mean, it's a horrible situation, but I think eventually it'll kind of lead to people seeing Republic and taking out debt, doing a loan, doing an SPV, an RUV, a Reg A, Reg D, whatever, and consider it at the same
Right.
level as a VC.
Yeah, like you said, that's a fair point. It's not traditional anymore. Like, with debt income, debt in place, Republic, like startups like Republic is enabling more community oriented investments. Angel investment is like pretty traditional, but it's not traditional anymore and not typical anymore. Like to get money, get funded to move the needle.
Yeah.
Two interesting topics you covered, and I want to dive a little deeper into a couple things. One is Republic is kind of enabling an additional round or additional help to already raised, let's say a pre-seed startup comes to Republic to get another round, which is not typically a round per se. What's the trend that you're seeing right now in this market? Like, is it still happening? Gumroad is a separate example, right? They've already raised money and they want to involve community, so they went to Republic.
Yeah,
given the situation we're in, go ahead.
Yeah, I think I feel like it still is, and I do think that there is an inclination now to almost look at options that are driven by community. And I think again, this is not a Republic exclusive thing. I think Party Round was also talking about raising from your community. There are so many different avenues now that are almost like fundraising tools where you already have a community, you have people who are excited about what you're building, and I think the accreditation status has been so limiting in the past that turning to people who are non-accredited who want to write you smaller checks, but then really in aggregation, it's the same as maybe one VC could write you. I think that's the perspective people are starting to kind of break down and just appreciate more because of what's happening in the market, because it's obviously going to be a lot harder to get one person to commit let's say 1.5 million versus if you have 500 to 1,000 or even there are so many companies that are pre-seed that maybe even have 10,000 users. It's so much more likely to be able to aggregate those smaller check sizes in this recession and in this macroeconomic downturn we're seeing that lead you to actually continue to extend your runway. The company can continue to grow. And I think even the founders who are still raising VC or they just closed around, they're coming to Republic because I think everyone's anticipating the recession and people want to extend their runway. So you can tack on, even if you do a round, you can extend your raise via Republic and get on a few other months of runway to really cushion everything. So I feel like everything is also coming from this perspective of wanting, I guess protection maybe might not be the right word, but I guess some sort of cushioning really to start just protecting companies, because 8-10 months ago people could raise so much money and obviously we're not in the same situation anymore.
Yeah, crowdfunding is kind of like a safety net. I mean, in a way, it actually adds more. There are so many benefits. I'm bullish on crowdfunding startups like Republic or WeFunder, Party Round. They're all involving community. So, two other follow-up questions. So, are you suggesting? So, what are some interesting things that you're doing from a Republic standpoint? Which is, are you empowering founders hey, you've raised a seed fund, come join Republic. We will help you raise the safety net round, whatever, the crowd funding. Are you and what kind of features or community initiatives are you taking up to educate, a set of founders? Because not everyone is aware of the power of crowdfunding or community funding. What are some initiatives you're leading at Republic? I'm just curious.
Yeah, no, I think it's a really important question. And something that we kind of recently realized is Republic's whole mission has been about democratizing access to investing from the investor perspective. And
Mm,
from the founder perspective, it's always been like allow your community, allow your customers, your users, really whatever the model is, to invest in the company. And so recently we've just kind of started thinking through Republic, like what does our founder community mean and what does it look like? Because we have a lot of founders who are applying to Republic who get referred to Republic by our venture partners, and we've never really like crafted out like what does this community look like. And so this is definitely like a teaser because we're kind of launching some of this in the future in a few weeks. But Republic
mm,
is actively looking at and kind of working towards like building out this founder community. We've done a lot of events at like New York Tech Week, South by Southwest, Miami Tech Week, and we're looking to streamline everything largely centered around education. And again, not just education on Republic, but education on all types
right.
of alternative fundraising. We're doing a conversation with SVB next Tuesday, for example, all about alternative fundraising. So Republic's founder
Interesting.
community, this is like a bit of a teaser again. Like we're going to launch a little bit more information soon, but our
Mm,
entire objective now is like founder education and founder
right.
resources, founder guidance. Like I actually ran a program with Jenny Fielding last fall, and it was like a pilot program with 30 founders, a 6 week course all about fundraising. So we had like
Nice.
all these different types of guests come on, and the session that was the most popular were founders literally looking at how a cap table dilutes from like pre-seed to like
Mm,
series C. And it sounds like very granular, but it was literally our most popular event that we've
mm,
hosted because I think like these are the areas that people don't talk that much about. There's a lot of panels about like how do you cold email, like how do you do your pitch, but
right.
there's not a lot of like conversation on like what does a cap table like dilution look like? Like
Mm,
how should you set up your cap table? How much equity do you get? What does a term sheet look like? So I think Republic wants to eventually become kind of like that resource, like a reliable just community that founders can turn to, where of course you're going to get education about what this fundraising looks like, but you're also going to get
right.
education on like how to like cap table term sheet everything where you can get those logistics and kind of lean into it and just learn more. So that's something we're working on very actively. I'm working on it at Republic, and
Awesome.
you should hear more soon when it comes to all of those things just on Twitter and on Republic's Twitter.
I love that. I love founder programs because all you try to do is to like basically empower and educate founders,
Mhm.
which eventually end up having like big businesses, which will eventually open up a lot of opportunities. So it's all positive sum game in a way. Uh, so one question I have is, I think it's kind of like an elaborated discussion, but I want to hear your take.
Mhm.
What do you suggest for founders who are like they're not into pre-seed anymore, or they're trying to
Mhm.
get into pre-seed or seed round? And what do you suggest them to, or what's your path you show to founders to raise money in this current situation with all the market dipping and everything? Do
Mhm.
you have like a framework you suggest for founders? You tell, like, you talk to many founders, you advise them in a way. So any tips or any frameworks that you want to share?
Yeah, I think like the framework that I've always recommended has been like pinpointing, first of all, like companies that you see as your competitors. I like to work backwards. So I say, especially in an environment like this, getting as specific as possible with like the funds and the individuals you speak to are the best things you can do. Go and figure out every one of your competitors who is on their cap table, like whether it's just like looking at their portfolios, list all of those people out. And then just figure out if there's any other companies within the realm that they've invested in that are similar to yours. List out all of those investors from angel investors, pre-seed to maybe like seed and then pre-series A. List all of those people out on a Google spreadsheet. I think every founder should have an
Mm-hmm.
email list of like 50 investors or VCs that they really trust, that they know like not going to share their information. Send that Google spreadsheet to 50 VCs and investors and ask them to put down like who they know in that list and then get warm introductions. I think it's like super
Mm,
simple to do, but every time I've done a warm introduction for a founder, it almost always turns into like a positive relationship, a positive like connotation, whether it's a partnership or they actually invest. And so warm
right.
introductions are like, in my opinion, key to everything. I know like cold emails are great and cold emailing is like awesome, but it also is like much less of a hit rate than just like getting those warm introductions. So I think a
Right.
framework of just like building out very specific angel investors, very specific funds that you want to reach out to, and then working backwards with your community. Again, there's the community word, but like really working with the VC community or investor community, anyone who you know in the space. And if you don't have a VC and investor community, turn to like resources like Republic, Brex, like
Mm-hmm.
On Deck, Day One. There's so many founder communities. Just turn to those and just start to
Mm.
kind of build your network. So I really do feel like those relationships are super important. And that's kind of the framework that I take when it comes to reaching out. I always encourage warm introductions. I could like give so much other advice. All I'm going to say is maybe follow me on Twitter for when I explain more about this. But I
Right.
really think that's like the best way to do it. Just working backwards and creating that like super targeted list that you want to go after, and then getting people to help facilitate warm introductions.
So that's very interesting, right? Like I have like a different opinion on warm introductions, but I'm more into like cold DMs and cold emails because that's always worked for me well. A
Mhm.
couple follow up questions there. One is when you talk about warm introductions, so it's more of like network effects, right? You know someone, and you kind of like place an ask to
Mhm.
get an intro to someone who you are targeting.
Yeah.
And do you have like a formula there for founders so they can actually use it? Like, how do they place an ask? It's always awkward, right? Like, because you know someone and you're kind of asking them to share your what do you call your debt, your
Yeah.
social capital. You want to like they want to share your social capital, which is kind of okay, I guess. But how do founders navigate that? Like, hey, Zehra, would love to have an intro for Naval. That's like a plain simple ask. But
Mhm.
what do you see, and what makes a warm intro work?
Yeah, so I think like when it comes to just like asking a VC or asking an investor to facilitate an introduction, or even just like proposing that and sending over that spreadsheet, I think framing it from the founder perspective to the investor behind like we've had this conversation in the past, you've added this value to me, here's the spreadsheet, like no pressure if you don't know anyone, or no pressure to actually like go
Mm,
into the spreadsheet and add stuff. Because I mean, I think at the end of the day, people forget that like half the reason that I'm able to like talk to so many VCs and refer so many deals is because I get a lot of founders asking me to do this. And then I will make introductions to VCs, and then those conversations will just snowball. So I almost think from the founder perspective, like think about it less from just like using the social capital, but also think about it more like you are also facilitating, you're helping that VC, because deal flow and
right.
like referring deal flow and introductions is also a way that like VCs start to rely on one another and create their own network effects and strengthen their own bonds. I have like a bunch of VCs that I've referred deals to started as just like very like acquaintance levels, and now because I've
Mm,
referred a lot of deals to them where founders ask me to introduce like send their deck over to them, we have a better relationship. So I feel like almost reframing it and thinking about it from that perspective, where like VCs also benefit from this, is a
mm,
way to kind of frame it. And then also just like find people who are advocates for you. Okay, here's my opinion. I think that you should only like, I really think that people, especially VCs, should lead with kindness. And if you are feeling like there's even a slight level of like they're insinuating you're using them, I feel like that's just not even a relationship to like bolster, because I think the people who care about founders like myself, like yourself, like a
hmm.
lot of people want to help and want to pay it
Right.
forward. Obviously, that doesn't mean that it's always going to happen. People are
Right.
busy, but I think even just like framing the ask, keeping it very simple, and realizing that if they decide to engage with it or not, it's completely up to them. But I I would always phrase it around just like you can see and how people respond, and then choose to
Right.
engage with the ones who respond positively accordingly to that behavior that you're seeing.
That's absolutely true. I want to like highlight a couple of things which you mentioned, which is
Mhm.
always have an exit door, offer an exit door, so that the receiver won't feel obliged, like
Mhm.
we're insisting them to like, hey, do it, or pressurizing them to like make it happen.
Yeah.
So that itself means like you're okay with having zero expectations. So it kind of builds a good rapport between you and the receiver. And again, I feel most of the people, at least I know in tech and startups, they genuinely want to help founders. They want the founders to win. So and I feel it's about like breaking that awkwardness and actually placing a specific ask. So I love that a lot. And the other point you mentioned is always like start with sharing a value, sharing some sort of value to the receiver, so that it won't feel like a simple ask per se. So have like just to summarize, have like have some sort of value for the receiver. Keep the ask very simple, and at the end, open an exit door so that they can actually like say, hey, this is like, this can't work, and you're okay with that. So I love that framework. Thanks for sharing. You should maybe like write more about how to do like warm intros.
I feel like I should. And I mean, I know the like cold intro versus warm intro thing is such a point of contention in like the VC Twitter ecosystem. But honestly, the last thing that I'd add is don't underestimate the impact of analysts and associates, because analysts and associates are going to be taking your deals to the investment committee and like advocating for you. So sometimes if there's like a GP, a partner, VP, whatever that you really admire, figure out like who the associates and analysts are at the fund, and they're more likely to respond to you and shepherd your deal, as opposed to like cold emailing or even getting a warm introduction to someone who's higher up, just because they tend to be busier. And analysts and associates like myself, like we have the time and want to like go through everything and be helpful, and it helps bolster our careers too. So that's the last piece of information that I'd probably recommend.
Yeah, that's an amazing hack. I love that so much. So I have like one last question before we wrap things up, which is what are some lessons you want to pass along to folks who want to get into venture capital, being a senior associate at Republic, becoming going from intern to where you are? What are some things you feel that people should pick, like going from traditional investing to like the thing you did?
Yeah, I think a huge part of it is really like figure out what you want. And it doesn't have to be like so specific, like I want to do like pre-seed fintech investing. It can be really as generic as I want to learn about like how to like present something to an investment committee, or I want to learn how to do due diligence, or I want to learn how a balance sheet can inform an investment decision. It can be really generic or overarching statements like that. And I think going in with a perspective of what do you want to learn, it could be, I want to learn how to deal source, I want to learn technicality. And most funds have like a structure like that, where some funds rely like a lot on just like sourcing and getting a lot of companies referred to them. Some focus a lot more on like technicalities, TAM, looking at balance sheets, looking at financial statements. So figure out like which direction you want to go into, what you want to learn, and then figure out what firms focus on that. Because I think VC, people often forget that VC is an industry, but there's like very, very granular, like you could go from like a pre-seed fintech fund that does like super focused like diligence and has an investment committee, but you could also do like a seed stage consumer fund that focuses a lot more on like, I don't know, a product and cares most about that. Like there's so many different avenues. So figuring out what that avenue you're looking for, I think from like a surface level, is something that I would recommend. I knew that I like had no idea, and Republic was kind of the perfect company to start working at, because I like talk to so many different types of founders. I'll talk to like B2B SaaS pre-seed founder, and then like Series B, like consumer social founders, like 30 minutes apart. And that's been like super informative to my career, because I've looked at all their different balance sheets, all their financials, and I've learned so much about various industries. So this is why Republic was the perfect fit for me, and just like kind of figure out like what's the perfect fit for you. What do you want to spend your time doing? Do you want to spend more time doing diligence? Do you want to spend more time talking to founders? And so many funds will make it very clear on their websites like which direction they prioritize. So that's just something I highly recommend. And I knew I had no idea, so Republic was like the perfect opportunity. And I was like, there's no other company where I can do VC stuff and be a startup operator at the same time. So it was such a perfect opportunity for me.
I love that. I think in short, what you're suggesting is niche down to what you really like. If you are into like crypto, just focus on that. If you're into SaaS, focus on that. I feel Republic is like a buffet where you have pretty much everybody is like, on it.
Yeah.
Zehra, thank you so much for your time. This has been great. I mean, kind of like almost gave a masterclass about raising money in recession, how to raise money in recession, or what are some tips and some frameworks. I love those frameworks, especially I think the love the way you specifically pointed out how to do like a warm intro, and get the ball rolling, and so many other things. So, lastly, what you're up to, if you want to like share, where people can find you. Take it away.
Yeah, you can find me on my Twitter. My username is Zehra Naqvi with an underscore after it. I think the one thing that I'll say is I think this whole conversation is kind of like a teaser, like look into everything that Republic has kind of happening. I'm really excited to be working on our founder community. I care a lot about supporting founders. And so just stay tuned there for a lot of the things that we're planning to do across like the country, but then hopefully internationally as well.
I love that. I'm rooting for you big time. Yeah, folks, just stay tuned for the big announcement coming from Zehra and Republic. But thanks for taking time, Zehra. This has been like so much fun talking to you about VC and everything else.
Yeah, of course. It was really, really nice being on, and thank you so much for having me.
Awesome. All right, guys, that's the end of this episode. Stay tuned for the next one. Cheers.